All right, that's great. There's a connection. We're good to go. So good afternoon, dear friends. It is a pleasure to welcome you to our Crisis HR course, How to Build HR Without a Budget and Especially in a Crisis. And today we're going to talk about crisis performance management and employee downsizing. The topic we are going to cover today is employee appraisal, performance management, which in itself is quite big because to build a management system, it's a very important topic. If you have not done so, I would recommend that you do so and take a course on how to build such a system. But the purpose of our today's session will be to focus on the peculiarities of this direction in a crisis, in those situations that happen when you have to make tough decisions. So I will spend your time today on the specifics of this particular crisis situation. So what are we going to discuss today? How to do employee evaluations quickly, how to choose who to lay off, how to increase the efficiency of those who stay, how to evaluate talent for free, and I will tell you why it is useful and necessary, and how to organize the career development of an employee. These are the kinds of topics we're going to discuss today. Let's get started. Number one, there are a lot of these principles here that I'd like to bring to you. That's why I thought so carefully about how I was going to tell you about it and built the logic. So I'll lead you on it. Hopefully it won't be impossible to get it to you as much as possible. So look, what's important to understand is when there's a crisis and when a company has fewer resources than it would like, because the goal of our course is precisely HR in a resource-constrained environment. Two major questions we must give ourselves answers to. We are cutting that positions or employees. We care more about employees for their backgrounds and thinking about what positions and what people in those positions we need to keep for our future. It's such a dilemma. It's even partly ethical because the company, on the one hand, has employees who she is grateful to and who have gotten her to where this company is, and it's kind of the company's obligation. That's one part of the coin. The second part of the medal, the company is on the verge of survival. Even if she's feeling good, not bad right now, we don't know what's going to happen tomorrow, what the challenges are going to be. That's why I'm rather here. Although I'm HR, I'm pro-people, pro-ethical approaches, but I'll explain why I think it's ethical. I'm here in favor of the company thinking about its future. You know, when you fly in airplanes, there's this very interesting instruction on how to behave in the event of some kind of emergency situation. And there runs a phrase that has become in some ways even the creed of many people. First, put the mask on yourself. That is where the oxygen masks are lowered. Many passengers fly with children, and that's where they tell the passengers, put the mask on yourself first and then the child. Why? Because if you don't put a mask on yourself, you can quickly pass out from lack of oxygen or excess of oxygen, and you can't help anyone. So you will be of little use. Your heroism, that you are a sacrifice and you want to help someone, will be of little use because you will not help anyone. And if you put the mask on yourself first, then look around and you can help others. See, in a crisis, the company's work with the employee is based on the principle of first put a mask on yourself. Yes, the company is committed to helping people in a difficult time of life, but a company can't help anyone if it becomes worse tomorrow than it is today and ends up going bankrupt. Therefore, in order to help someone, you must first help yourself. I mean, it's very simple. Either the company has money and can save some jobs, or this money is not there, then work, lose everything. So I want you, as HR of these companies, to also have the same in this moment-to-moment mindset. And it's ethical because you'll be able to help a lot more people, and for a lot longer if you focus on how to help the company first. Let's move on. The correct answers are, so when it comes to downsizing, we cut the most unnecessary positions first and foremost. At the moment of downsizing, we're about people, temporarily. Downsizing a position does not necessarily mean downsizing an employee. That's the kind of thing that's so ridiculous. That is you when you sit down with executives and think about what positions are no longer needed. Don't think about the fact that necessarily all the people in these positions will lose their jobs. I will now explain why they may not lose and how to keep them, but cut all unnecessary positions even if some great candidate is working for them. Next. Now the explanation. An employee who holds a position, if they are good, if you value them, they can move on to another position. And look, in a time of crisis, it's a good choice. It's better than being out of a job. I realize that people may not want to change jobs much at this point. Everyone wants to stay where they are, but the company is forced to change its position. And that extends to employees. So the employee is a good one from a position that is no longer needed, could in fact take another position currently held by a less effective representative. This means that at the same time as we are cutting unnecessary positions, we are cutting inefficient employees, even if the employee's position is not being reduced. So we have two parallel processes. We're getting rid of unnecessary positions and weak employees. It's entirely possible and okay that we end up laying off an ineffective employee, even though we don't have someone to replace them, despite cutting other positions with effective employees. We can find someone just as good or better on the job market, but there's no need to keep someone in a position just because it's still needed in the company. Let's move on. So two processes occur simultaneously during a crisis. We're cutting unnecessary positions and unnecessary employees. As a result, some employees, I understand an accountant won't become a designer and vice versa. Some staff will be moved from unneeded positions to needed ones where less effective employees were let go. Let's continue. Let's develop this idea further. How do you determine which positions the company no longer needs? Financial experts have a great principle that I really like and have used many times myself. It's called zero budget. The zero budget principle in financial planning is that when a department prepares its annual budget, it cannot and isn't allowed to rely on the previous year's budget. Literally, they don't care how much you spent last year or on what, that's irrelevant. If you need a budget for something this year, create it from scratch, forget about last year, and prove that everything in the budget is necessary. So the option of extending something and allocating a certain amount doesn't work. We start using this and that again because we need this and that. In a crisis situation, you can tell all your managers the same thing. We're starting a zero methodology or approach. This means you must justify all your structures, why those specific positions are needed, not about the people. I'll explain a concept for people later that you can communicate right away. It's the bench concept used in outsourcing companies, which I'll explain to you. You can say we'll put all our valued employees on a paid bench. It's a reserve. So don't worry, but give us exactly the structure we objectively really need. And simultaneously, you can ask managers to evaluate all current positions against these criteria. We have 5 criteria and a 5-point scale. From completely agree to completely disagree. Completely agree is 5 points. Agree is 4. Unsure is 3. Disagree is 2. Completely disagree is 1. 5 criteria. The manager must evaluate 5 statements for each position. First, without this position, the department, or if it's not a department, change it to group, branch, bank, store, cannot fulfill its tasks. Rate the level of agreement. Second, the position directly benefits and contributes to achieving the company's key objectives. Third, the position aligns with the company's strategic development direction. Fourth, the effectiveness and efficiency of work in this position are easily measurable and accessible. And fifth, the costs of the position are reasonable and justified in terms of profitability and economic efficiency. Moreover, you can ask managers to justify each of the 5 answers and explain why they think so, or provide a general comment on all 5 answers. This could be an Excel spreadsheet where each rating has a comment or there's an overall comment for all 5 ratings. And all positions with an average score below 3 points, where unsure responses dominated, are subject to elimination. Only positions with agree or completely agree responses should remain. If all your positions score above 3 points, you can simply rank the positions in descending order based on these scores and say we're cutting the 15% of positions with the lowest scores. That's one approach. Next, first cut positions, then people. Eliminate unnecessary positions first, temporarily not worrying about where valuable employees from those positions will go. Follow this by cutting unnecessary employees, including from positions that will remain. Consider transferring employees from eliminated positions to remaining ones. And if that's not possible, here's where the bench comes in. Create a bench. This is a list of employees whose positions were cut, but who are retained by the company as valuable assets. Let me explain how this works. The term itself means bench in English. It became popular thanks to IT outsourcing companies. Here's how an IT outsourcing company works. They find a client who needs IT services, and they recruit a team for this client. The client works with the team, but sometimes clients don't renew contracts. Either they've solved their problem or they've run out of money for various reasons. So the team is left without a client. The client was paying their salaries. In such cases, the IT outsourcer looks for another client to offer this team to. To avoid firing everyone and then having to search for new people, they transfer these employees to the so-called bench. This can be a structural unit, maybe an office. People might not change if the whole team ends up on the bench. They might not even have to come to work. That can happen too. Most often, there are rules that an employee can stay on the bench for no more than a certain number of months. The bench is where recruiters look for employees first, offering them new job openings. On the bench, people can be offered courses to develop themselves and have more job options. The pay may not be full, 80%, 70%, 50%, or for example 100% the first month, then decreasing until it reaches something like 30%. So rules can be developed. It's very important that employees know they've been placed on the bench, and that it's now also their job to find a role for themselves in the company. So I wrote that you can pay such employees a partial salary and prepare them to take on positions needed by the business. Next, the goal of performance management during a crisis. In fact, what's called performance management is about managing effectiveness, with performance as part of that larger process. It has several purposes in general, but especially during a crisis. First, It's your main tool for cutting the weakest performers, because through performance management, you always know who your weakest employees are. It's also a way to identify your best performers to retain them, to better reward them with some very limited budget review, to focus on the best. It's also a way to increase the productivity of those remaining after layoffs. Often companies need to cut more people than the drop in workload. So workload drops 20%, but you need to cut 30 to 40% of people. So you need to get the most out of those who remain. Plus, performance management during uncertainty brings clarity and gives employees purpose because it becomes clear to people exactly what's expected of them and how they can help the company. And a very important last point, whatever performance management system you choose, like OKRs, helps you quickly and effectively focus employee efforts on the company's most important current priorities. Next, what not to do. Sometimes companies do this and it's a mistake. Cut those who earn the most first. It's always tempting. Let's cut those who earn more. It's easiest to cut them because one such person may earn as much as several other employees. But it's foolish to cut those who earn the most because earnings are not a sign of being unnecessary. That's absurd. I'll explain later how it should be done. Cut those who joined the company most recently, on the principle that you're new here, so we'll fire you, while these others have been with us longer and are closer to our hearts. Or cut those who don't demonstrate loyalty, to get revenge on people who may be doing a good job but maybe don't socialize much with management, so cut them. How should it be done? For each employee, even if they're highly paid, you need to understand their value to the business, especially in the current situation. It may be that yes, this is the most expensive employee, but they create more value. That is, view each employee as an investment. Is this investment in this person paying off or not? Evaluate not just behavior but results. During a crisis, there's a desire to get rid of all the disloyal ones, everyone who criticizes, argues, and so on. But during a crisis, you need to look primarily at results. Why? Because your so-called jerks, some toxic people and managers, may turn out to be some of the most effective managers and employees during a crisis. So judge by results, and behavior can be tolerated during a crisis. If you're having difficulty with a particular employee or position, and you're not sure whether to fire them or not, you can use an in-depth analysis tool. With this tool, you analyze two scenarios. We fire this employee and eliminate this position, or we keep them. For each scenario, you detail what good things will happen if we fire this employee from this position, and what good things will happen if we keep them. Same for the bad things that will happen if we fire them, and what bad things will happen if we keep them as I ordered. You rate each item on a 10-point scale from 0 to 10. Try to have the maximum number of items in each section. But even having more items in some sections than others will already show which option is favored. Then you need to total the points in each cell, subtract the totals from each other, and enter the final score. Here and here. And whichever option gets more points, either firing or keeping, that is your best decision for this employee or position. What's the most effective way to downsize? Based on evaluating employees' results and behavior specifically in the current crisis conditions, never past accomplishments. Not everyone who was effective in the past will necessarily be effective now. There's even a phrase, wartime leaders and peacetime leaders. In the book, The Hard Thing About Hard Things, Ben Horowitz describes this situation. A crisis can always require adjustments. You may later want to bring back those who only know how to be effective in calm times, but right now they're not the right fit. Next, how to quickly evaluate employees. Even if you haven't done it before, you can conduct a quick performance review using a reversed questionnaire, or conduct an assessment center, or identify KPIs for positions, calculate them and understand how things work, and do a 360-degree evaluation or ask a supervisor to quickly assess an employee. Each of these suggested approaches is quite extensive, and there are separate courses on them that I could recommend. But since our focus today is more on actions rather than knowledge, I'll skip that here. Next, how do you choose who to lay off? First of all, based on performance evaluations and anyone who is temporarily underutilized. Sometimes workload drops and the company thinks, well, let's support the employee. No, if utilization is down, you need to cut back. How do you improve the effectiveness of those who remain? It's no secret that during a crisis, there are times when fewer people are left than needed, but circumstances don't allow for more. Therefore, a crisis is a time to increase the efficiency of those who remain. What can help? First, implementing a system like OKRs, where people are set quarterly goals with their participation and key results are defined. Systems like KPIs or MBOs, they are more long-term, involving the development of either indicators or goals for the year. And in a crisis, this is a poor option. It's even better to do it monthly, or quarterly would be even better. Be sure to implement the practice of regular one-on-ones between managers and employees. It greatly improves efficiency. Also implement the practice of annual performance reviews, and possibly even the 15% rule, which was used for a very long time at General Electric and Microsoft, where after the annual evaluation, the 15% lowest performing employees were let go. During a crisis, it's basically not the time to give second chances to people who are performing poorly. How to evaluate employee potential for free? There are free tests to identify talents. These are the HiF test and VacRector. These are tools developed by different authors that offer a free talent assessment option. Why talents are important and why you need to work with them. We've already talked in class about employee development. We looked at an example of a development plan where these talents were mentioned. During a crisis, employee relocations often occur, redistributing job responsibilities from those who left to those who stayed. In all of this, it's very helpful to consider what talents people have, because when a person works in their area of talent, their efficiency increases. So it's useful to know this. How to organize employees' career growth. This should be one of the company's main priorities in human resource management. Career growth management. Why? Because career growth is ongoing, and when there's no budget, it allows you to address the most important HR challenges to increase employee motivation. When an employee sees that things are bad in the country or the world, there's no salary increase, but they can take a higher position and their income will increase. This is motivating. It creates hope. For retention, the best employees, when the market is unstable, would prefer to stay in a company they understand and wait for their growth rather than try their luck at other companies. Fulfilling vacancies, when people know that growth is possible in this company, as an employer, is more attractive than others. And for employee development, because development through experience is the most effective way of development, so it's good for growth. How to do this? You need to implement several practices for career management. First, start regularly sending job openings to employees, even if you think there's no one for them right now. Why is this important? It's preferable to send them out weekly. By doing so, you're showing your employees we're interested in internal growth, so we're talking about vacancies. By doing this, you're encouraging their appetite, their interest. Next, you never know what an employee is capable of or what they're willing to try. Often someone tries out, goes through the selection process, and it turns out their abilities are sufficient and better than those of people from the external market. Next point, make recruiters career counselors. I practiced this at the STB TV channel. In my job vacancy emails, I wrote, "Dear colleagues, those interested in career growth, come talk to our recruiters because they know better than anyone the requirements for all positions and what managers expect. They can evaluate you, interview you, advise what to improve, what to learn." And people came, they came to the recruiters and people grew in their careers. Add a question about career plans in the employee development plan. This was covered in the last session. Also, practice horizontal career growth options for employee development. This is when the company encourages people to try positions at their same level in salary, but in parallel saying it's great when you change positions. It's a plus for your further development. Usually when a person has changed several positions, even if horizontally, they've gained experience and better prepared themselves for a step up. Next, homework. Write a letter to department heads about the necessary 30% reduction in company staff. You don't need to send it to the actual managers, just write an example of such a letter as a homework assignment. And give these managers tools that would be suitable for your company based on the materials from this session. That's all. Next, we'll talk about crisis communication and morale support. And motivation? That's all. Thank you for your attention. I'm waiting for the homework. Bye-bye. Talk to you soon.